Looks like we got the room opened up here for today's version of Trade of the Day Live. It's been a couple days since we were able to sit down and host one of these. We've been on the road traveling,
Yep.
uh, still remotely here, but we're here live with you and really excited to be sitting down. Helaine, how's it going? Interesting day in the markets.
Oh yeah, definitely some interesting news today, but doing well. Happy to be here with everyone.
Yeah, absolutely. Really excited to sit here and break it down. We have some thoughts about, just looking at the S&P 500 markets from, the 10,000 foot view, like we always like to do, have some interesting insights there. There's of course been a theme playing out in the market that we've been all over here, Helene. I know a lot of people have been talking about it, but there's been a lot of rotation under the surface in this market,
Yeah.
seeing some broadening out, across the board. A lot of different things across the market are starting to work. So we're going to touch on that, I know, a little bit today and have some charts for the folks to kind of, see a visual of it, exactly what's happening. And then, of course, just like always, we have several trade opportunities of,
hmm
given the market conditions, given the currents that are moving stock prices in this market right now, we have a couple trade ideas of how we would actually look to play these themes right now. So, Elaine, I'm going to go ahead and pull up the first chart we were going to talk about today,
Okay.
and so we can go ahead and get underway, sharing what we were going to talk about today. So, of course, here is the first one. Like, just per usual, we always like to look at our chart of the S&P 500 here. And just right off the bat, Helene, as we've seen, for quite some time now, coming off those lows in April, really powerful uptrend being displayed, across the market here. Of course, in the first part of the uptrend, we were really being led by a lot of the mega cap tech names, some financials, some industrials. But of late, that has begun to start broadening out. We've maintained the, underlying trend 100-day, but of late, we have slowed somewhat in that momentum to the upside. But just, still really strong trend here, while we're having some of this rotation playing out. But what else are you seeing in the charts right here?
You know, We're seeing a powerful bullish trend, as you said. We've been kind of sideways, honestly, over the past couple of weeks, almost to a
Hmm.
month, even though we have just been getting a little bit higher tick here and there. It's overall really broad, bull trend still, but as you had kind of alluded to, this isn't showing this rotation that we're seeing behind the scenes. But overall, broadly speaking, we're still in a very strong bullish uptrend and have been very resilient, in my opinion, given the time of the year that it is. I mean, typically this time of the year, one bad headline is enough to kind of knock everything down. But we've been very resilient, and that's what the chart is showing.
Yeah, exactly right. It's a great point, And when we were leading into last week's jobs report on Friday, we got what I would say, a pretty negative report there. But in the face of that, the market, I mean, you can see on this bar right here, folks. This is Friday. We
Mhm.
got the really weak labor market report here in the U.S. and the market jumped to a new all-time high. It's kind of one of those weird setups in the market you get from time to time where bad news can actually be good news,
hmm
at least in the case, specifically referring to, equity prices and stock prices. So, we're in a little bit of a scenario like that, but, Helene, I think is really wise to point out, we're still in a strong uptrend, like we were saying, still making, good series of higher highs and higher lows. And, as you said, it can be a little deceptive, seeing, a lot of headlines recently because we have set several new all-time highs on the S&P
hmm
over the past couple, or really over the last month. But if you look, there's a fairly tight range kind of bracketed around this index right now. Call it,
Yes.
there's roughly a ceiling just a couple points above 6,500. We've just barely eked out just a couple new all-time highs above that level in this
hmm
past month. But to the downside, there's the kind of the lower bracket, lower end of the range is about 6,400. So it's staying kind of compressed in there. I think markets are really just unsure of which way to go right now. Until we finally start getting some answers, about rate cuts and potentially the additional trajectory of the labor market, things like that. But those are the things we want to point out there. But Helene, this next chart, I know this is a really good indication of what we've been talking about that's going on under the surface in the market. This rotation, you're seeing, some people start to de-risk out of some of those year-to-date, major winners. The momentum names we've heard so much about in the first, half and first, 8 months really of the year. And some of that capital, some of those wins are starting to be redeployed into some of the other laggard sectors and areas of the market. And so that's being represented in this chart right here. This is one thing we wanted to look at, and I have another one too. But this is of course, the New York Stock Exchange advanced decline line. And so this is one of our favorite breadth indicators. This is, really a strong indicator, a strong chart. And as long as you see this line sloping up, just the basics of it, if you see this line sloping up, that is a very strong signal of, increasing breadth across the markets, because that means across all the entire of the or entirety, excuse me, of the New York Stock Exchange, if this line is sloping up day after day, that means more and more of the total issues or equities trading through the NYSE are rising as opposed to falling. So this is, basically just the net difference on any given day, whether more issues, so stocks, ETF, things like that, more equities were falling as opposed to, or more equities were rising as opposed to falling. So when you're seeing this line slope up, that means more issues are rising as opposed to falling. So a really strong signal that we're seeing right here. But Helaine, I'll let you go ahead and cover the next one right here. This is just another fun tool we always like to track here. This is a really good way to kind of take the temperature of the market to see what's working, what's not. But this is looking over the past month, but another great indication here.
Absolutely, absolutely. Yeah, this is definitely something that we like to keep an eye on to see what is exactly is going on. As you can see, this is the sector tractor over the past month. And so it is breaking down the S&P by the various ETFs and sectors. So we have communication services, which is usually like a lot of mega caps. We have consumer discretionary, staples, energy, financials, you name it, it is listed here. And we can see some clear and obvious trends here. Utilities on the decline. Consumer staples have been down broadly. And then we're seeing what I said a couple weeks ago, healthcare is up, okay?
Yeah,
um,
starting to work amazingly out of nowhere.
It's been a laggard for so long, it's only a matter of time sometimes. But communication services up over 6%, consumer discretionary up nicely. So you're able to really see what is working and what maybe is falling behind. Now, it doesn't mean that all stocks within that sector are going to be up or down if the sector is up or down. Of course, there may be outperformers or laggards within each specific sector, but it gives you a really broad idea of where money is shifting into and where it's rotating into. So as Blane had kind of noted earlier in the year, after those April lows, we saw a certain number of stocks really lead the way higher. And recently, we've been seeing a rotation out of those names and into different names. And so this helps us see exactly where that money is moving into.
Exactly right. And as you mentioned, Helene, of course, comm services have been a large, really strong outperformer over the past month. That's largely because of Meta and namely Google too. Google's been the really strong performer in that sector. That's really creating a lot of that performance. But seeing the consumer discretionary, up almost 5.5% over the past month. Healthcare, like you said, one of the biggest laggards in the first half of the year. I mean, it was just awful trading almost all the way across the healthcare sector, up almost 6% over the past month. Even the energy sector it was a landmine. Just but pretty much anywhere you stepped in there, capital was just getting blown up in the first half of the year. Energy's even been up about 3% over the past month. So you can see, just as we said, this is another indication of, while there's some churn rotation going on in this market, you can see it happening right here. If you look, utilities were a large leader through the first half of the year.
Oh,
Tech
yeah.
was a large leader. Of course, there's pockets of tech that are still really working quite well, but as a
Hmm.
whole, as an entirety as the sector, it is actually down over the past month just marginally. It's down about 0.4%. Again, there's still some pockets of tech that are working quite well. Some of that's obviously represented in the comm services too, with Google, Meta, names like that. But, one other thing I want to point out here too, Helene, is that there's some really healthy indications of a bull market here. I mean, look how out of all 11 sectors here, all but three have been up over the past month. That's a really, really strong sign of, broad breadth across the market, broad, healthy
Hmm.
trading. A lot of things are working right now in this market. And then two, just look exactly at what is working. You can see, look at the ones that are red, the ones that are majorly in the red. You see utilities down, staples down. If you see those rising, that means, investors are getting cautious. They're pulling back. They're looking for the more defensive plays.
Hmm.
they're clearly not, trading in those right now. You can see discretionaries rallying, comm services is rallying. People have traded into some of the true laggards from this year. So
Exactly.
you're seeing some rotation into healthcare. Financials are working. So it's really great to see the different performances across these sectors right here because the market is fully anticipating that rate cuts are on the way next week. After several consecutive week labor reports, even with the rising inflation reports we've gotten lately, we do have a couple of those tomorrow. So that's certainly something key to be watching. But the market with next week's Fed meeting is fully anticipating. I looked this morning, it's about a 95% probability that they've assigned that a rate cut is coming at next week's Fed meeting. And markets have started positioning for this. They're anticipating rates to come down. If you look at the long end of the curve, 10-year U.S. Treasury, that yield is coming down. Mortgage rates have been coming down lately, all in anticipation of this. And that's why some of these sectors are working. This really kicked off, this rotation we've seen of late. So, Helaine, anything else you want to touch on right here before we hop into our trades?
No, I think we covered it. I think we're gonna go into our trades for the day.
Awesome, fantastic. Well, I'll go ahead and hop into my trade first, and it's kind of playing off of this market rotation theme that we've been seeing play out quite a bit of late. So, as we mentioned, people have been, taking some gains off the table, redeploying that into other areas of the market that have been, lagging, and particularly now with the rate cut narrative, as a tailwind behind new areas of the market. As we said, a lot of that has gone into, consumer discretionary. It's been redeployed into healthcare, but particularly the really interest rate sensitive areas of the market. So whether you're talking about a home builder, anything related to the home building industry in the market, of course, the discretionary, like we just talked about. But one of the other areas, Helaine, I know you and I have been seeing this a lot lately, that's been working fantastically, probably the best it's been trading that I can remember in recent memory of the past couple of years. Small caps have been have been a danger zone to try and trade.
Oh
Uh,
yeah, for a long time.
exactly. Ever since we had the high rate of inflation, rates started rising. Small caps have had a lot of headwinds in their way, but now that
Hmm.
it looks like rates are going to start coming down because of the weakening in the labor market, we're seeing small caps start to catch a bid and start to trade really well. You can see this is looking at the past 5 months of this chart right here, and this is going to be the IWM ETF. So this is the Russell 2000. That's the index that tracks a large basket of small cap names. They are incredibly interest rate sensitive. So when you start, getting news that rate cuts are on the way and you start getting those rate cuts, that's a massive tailwind to the small caps, to that grouping of stocks. And so this ETF is reflective of that. So looking at IWM right here, you can see, of course, really great trading over the past 5 months. Nice series of higher highs and higher lows all along the way through this chart right here. Really strong recovery coming out of the trading in April too. And of course, really nice technical trend line buy signal going here. We can see our red line. That's our 21-day EMA right here. That's trading. You can see it's clearly trading above our green line down here. That's our 63-day EMA. So the trend lines, they're all lining up. The ETF is trading above both of those. Really strong technical buy signal there. And also, if you look at the blue lines that are on here as well, these are our Keltner channel bands. I've included these on here to show you that, even though IWM has been trading up, making a series of shorter term higher highs and higher lows. It's traded outside of this upper Keltner channel band on several occasions recently. You can see it's actually pulled back just a touch in today's trading. It's trading at just about $236 per share, just a touch above that. But it's inside of that upper Keltner channel band. So that is signaling IWM is not technically overbought at these current prices, despite the really strong trend that it's been on. And one thing I'll add further too is actually, if you were to zoom this chart out, IWM is now getting very close to start challenging its all-time highs. Of course, it would be 52-week highs as well, but it's getting very close to levels that it set last year. I believe it was in late October, November, when it was setting its actual all-time highs. It's getting very close to start to begin challenging those levels too. If we start to get a lot of rate cuts, the market seems to be starting to, anticipate that, start to price that in. If that starts to play out, I think IWM could be set up to power through those all-time highs over the next couple months. So that's the trade I found for today. And specifically, I was going to look to target this one, Helaine, with a directional call option purchase. So I landed on the October 3rd expiration here. And
Okay,
specifically,
about a month.
yeah, I just went just a touch in the money. This is, a little higher priced ETF. It's, about 240 bucks per share. So trying to be conscious of costs here, but you can see for the October 3rd, 225 strike call. That's currently coming in. It's actually dropped about 10 cents since I saw it earlier. So it's coming in at about 1293 for the call right there. So I'll go ahead and update that one right here. But this was a really attractive looking trade opportunity. So go ahead and show you the profit potential here, and you can see that if IWM continues to trade up from here, this directional call is standing to have a very, very nice upside. Some really great risk to reward there. You can see that in the various price change scenarios, some of the possible profit potentials here. So a really, really nice upside being offered by that call option.
Oh yeah, that chart was gorgeous. And the leverage for that option looks great, Blane. Yeah, the charts don't look better than that, I have to say. That's as
Yeah,
good
it's
as it
definitely one of the
gets.
better ones. I mean, as we've said, there's a lot of things that are working right now. That
Yes,
is one of the cleanest looking trades, one of the cleanest looking charts I've seen in quite some time.
I
So I,
agree.
I wanted to make sure to feature that in today's call in case that anybody had not had that on their radar. I wanted to make sure that they did. But
I love
Helaine,
it.
I know you have a great trade opportunity and set up for us
Yeah.
today as well. So I'm excited to see what you might have cooking for us today. So
Let
let's see.
me go into it. But first, I want to show you guys a trade opportunity that I had shared. It was on, one second here as this gets set up. August 28th, I had recommended on Trade of the Day Live to buy the XLC call. Specifically, it was the September 26th, 107 strike call. As you can see, looking at the chart, that day right there, I saw this bounce off of the middle Keltner channel. I saw the trend. I loved it. And I said, I think from everything I'm seeing, looks like it's going to trade higher from here. And the trade, went my way. It bounced as I thought it would, traded higher. And I currently have a 44% return on the trade. So in just over a week, I have over 44% return on this call option purchase. And looking at XLC right now, it's pretty overbought. So I'm personally going to go ahead and exit this trade and take my profits off the table. That's how our team, manages these trades, especially if I only have one contract. If I had multiple, I might exit one of the contracts and hold a remaining one, or even leg into a debit spread in order to protect some of my profits and let that winner keep winning. But I only have one contract. The ETF is overbought, so I'm going to exit with that 44% return. And
Yeah,
then,
that's a great looking trade there, Helaine. You
thanks.
you timed that one up perfectly. Found you spotted the opportunity, presented you a really nice entry point, and man, it rallied strong after that. So great
I
job.
appreciate it. And then, sorry, these let me go into my trade for today. Can you see my chart okay, Blane?
Yeah, I can't. Well, it I see XLC. I don't see. Okay, here it is. Now I can see it now.
Okay, great. So my trade of the day is for MS, Morgan Stanley, and this is one of those pockets of strength that we've been seeing the banking stocks. They have been just performing so well. As you can see, like most of the market wiped out in April, rallied from there. And just since then, it has been on this killer trend, really consistent higher highs and higher lows, new 52-week highs. Just really, really solid trading. Exactly what we want to see when we're looking for these bullish trades and opportunities. A huge move here today, but it's not currently overbought. And I do think that there's more room for it to trade higher from here. We confirmed the buy signal for this trade using the 35-day EMA and the 200-day moving average. We want our stock to be trading above those moving averages to confirm the buy signal. As you can see, it's currently trading above both of them. Not only that, but the 35-day EMA is trading above the 200-day moving average, once again confirming that bullish momentum. And looking at the Keltner channels, as I said, even though it's a big move today up, it's currently trading below the upper Keltner channel, meaning it's not currently overbought, and it appears to be ready to break higher from here again. So I would be looking at the October 10th options and specifically looking at that 140 strike call. As you can see, it currently meets the 1% rule, meaning the stock has to move 1% or less at option expiration in order for the trade to break even and start profiting. So that is the trade that I have picked for today. And yeah, so
No, it's a great looking trade, Helaine. Yeah, it's the financials are an interesting one right now because there's a lot of pockets within financials that are working really, really well. And then there's
yes,
some others that, had been, really strong leaders earlier in the year. And, they've kind of tapped the brakes. They've cooled off a bit lately. But Morgan Stanley, and several of their peers, man, they are just breaking out to new all-time highs. The charts look incredible. So that was a great trade find. Really,
appreciate
really
it.
strong looking setup. They have some nice, tailwinds behind their business as well. Several different things. Capital markets are working really well. M&A, IPO markets coming alive, and they even can still continue to benefit as well, even with rates coming down. Even as long as the yield curve remains nice and positive and fairly steep, they can still continue to do pretty well. So really strong looking setup there for MS. I love it.
Appreciate it.
Absolutely. Well, Helaine, I'm going to go ahead and post something in the chat for everybody right now. And folks, I just sent it through there to everybody. If you have not checked this out before, I actually just sent you through a link to my WPO or weekly profit opportunity newsletter. This is something I put together on weekends. I do a lot of research. I look across the market to try and find the best trade setup and opportunity that I can find for the upcoming week. So I put together a video, break down the full trade. I go into even more detail than we do here, even include some trade management guidelines, stop losses, things like that, of how I would actually look to manage the trade. And the trades, they have been performing quite well lately.
Oh
If
yeah.
any of you have checked them out, a lot of them have given the members a lot of opportunities to profit of late. And I did want to highlight one of the trades that I actually put in there just about 2.5 weeks ago. I spotted a really great setup in Google. The trend looked great. They looked primed for an acceleration for a breakout higher. And shortly after I put out that trade recommendation, Google shares the stock took off, and the call option has done really, really well. In fact, like I said, the trade was put out about 2.5 weeks ago. It's currently sitting on a profit opportunity of 158%, just about
Wow.
2.5 weeks. So that
That's
one's been
awesome.
doing really, really strongly. So I hope you all, if you have been joining us here live for TOD Live for quite some time, I hope you all had the chance to see that trade before it took off. But if you haven't, again, I'm putting out these opportunities every single week. And of course, not every trade's going to be a winner. Not everyone's going to produce 150% winner in just 2 weeks. But with that said, the trades have been doing quite well lately, and I want to share that really successful one with you. So if you do want to check it out, the link is in the chat right there. You can actually join for your first month, so you can get 4 weeks of the newsletter for just $1. Your first month, the trial period, it's $1 for 1 month.
That's a
Uh,
great deal,
just
I
a
have to
great deal
say.
on that. Thanks, Glenn. Appreciate it. So wanted to include that there for you. But that's just about everything I had to share here today, Helaine. I know we still have some folks hanging around the room. We do have some big earnings coming up later, just some things for folks to keep their eyes on. We have Oracle reporting earnings today after the bell. They're obviously a major player in the AI CapEx spend, the AI revolution.
Hmm.
That's a really important name to watch after the bell today. So, see how the market likes their earnings and guidance they put out. And then, of course, tomorrow and Thursday, we have PPI inflation and CPI inflation coming out in back-to-back days. Now, again, the market's fully anticipating rate cuts starting next week from the Fed. But these inflation reports, they certainly could factor in perhaps, whether the Fed takes, opts to go for a larger cut next week, or even could factor in whether a series of cuts is on the way, or we just get one and a pause and maybe a cut later on or something like that. So certainly be watching out for those inflation reports. I'm sure the market's going to be moving around, trying to price in, discount whatever we can glean from those. So, Helaine, anything else before we go?
No, I think we've covered it all.
Awesome. Well, sounds great. Well, folks, I want to thank you all so much for being here with us live for today's version of TOD Live. We have to get back to the markets. There's a lot going on, a lot of trades happening,
Oh yeah.
things we have to keep an eye on. But again, thank you so much for being here. We always love having you all in the room live with us. Highly encourage you to come back. We're going to be back live this Thursday,
Mhm.
same place, same time. So be here live with us. Would love to have you. But until then, have a great week, everyone. Happy trading. And Helaine, see you around. See you in a bit.
See you, Blane. Thank you all so much, and we'll see you on Thursday.
Yep. Take care, everybody.